This
Recording right now.
conference will now be recorded.
So please, folks, make sure you stay on mute unless you're actually asking a question, and I would actually request you use the chat box if you can. So welcome to session number 24, Accounting Month-End Close Processes. And this session is being conducted by Kathy Lundquist. Most of you, I'm sure, know her extremely well. She's been around for quite a while in the with SA, of course, and in the SX space. She's got over 20 years of implementation experience. She also is an adjunct professor at Cornell, Industrial Relations. One of the things that I really love about how Kathy does her presentations, any of you that have been to any of her TUG sessions that she's given, you know, Kathy also has been on the other side of the fence, basically, you know, as a user, right? So she comes from her experience as a controller at Husky before joining NSA. So she can empathize with being a user and trying to use the ERP system. And with that, Kathy, I know you got a lot to cover, so I'll turn it over to you.
I do. So, hello everybody. For those of you who are just joining, if you could put yourselves on mute, feel free to type questions in the GoToMeeting chat box. We will also be at the end, after I'm done with the presentation, opening it up for any questions. So, if you have questions as we go and you want to jot them down, feel free to do that. If you want to put them in the chat box, or when we come off of mute for the last few minutes, feel free to pose your questions. So what we're going to be walking through today is a process that initially came to our attention from users requesting it. So for some of you, SXE is new. You're just coming on to CSD. For others of you, you've been on the system for quite a while, and some are in between. What we are covering today applies whether you are using the graphical or GUI user interface or the WebUI CSD. It does not matter if you are on-prem or using the cloud or using GUI or WebUI, it still applies. Now, there may be some items that we cover that were not added until a specific version of SXE, and there's not too many of them, but there may be one or two that I will mention in a call out. So this is applicable pretty much regardless of the version that you're using of the software today. There's often questions about training, like I need to train my folks in payables, receivables, general ledger, the financial statement, but most training is not targeted specifically toward the month-end processes. So we're actually going to also have a webinar next month on year-end processes. But I've had several folks that are newer to CSD ask, how do you do the month-end in SXE? So this is targeted whether you've been on the system for a while. There will probably be some things that you'll say, huh, I didn't know that was in there. Or if you're just new to the system learning it. So we're going to talk about the concepts of soft versus hard close in the system, back posting or posting journals into a period prior to today's period. So if I'm in October now and I want to post things into September, we would consider that to be back posting. Recommended processes and reports to run within CSD. Balancing the general ledger to the subsidiary, which is a whole other set of topics and webinar in and of itself. Cleaning up the suspense accounts, monitoring them, paying attention to them. Posting the profit for the month using a process called GLAP. And also for those of you who have worked with me before, you know that I'm a fiend for white papers, for detailed information. So in addition to what we're going through with this presentation, I'll give you my email address again at the end that you can take down if you'd like a copy of the white paper that goes through this information. And we'll also have time to do some Q&A. So the first concept we're going to cover and talk about is soft versus hard close. Now, not everybody is coming off of SXE GUI migrating to the cloud. Some folks are on different systems, and a soft close in CSD versus a hard close in their systems is a concept that is new. So some ERP systems are not closed altogether until you run specific processes. So usually there's a month-end series of processes that the IT team needs to do to close out a period, run specific reports and information to history files, and then release the system the next morning for users to get into. And we consider that to be, in general, a hard close. In SX.e, and I'll refer to it intermittently as CSD, CloudSuite Distribution, or SX.e, so either potato, potato. In SX.e, the next day is just the next day. So October 31st is this Saturday. There are no specific processes that need to be run in the system for me to start transacting business in November. So it's a soft close. Whatever information you need to run reports on, you can continue to run those reports after you've started working in the new month. So that's not, it's not something where we close the AP module, then we close the AR module, then we close the inventory module. And there are no specific reports in general that need to be spit out at the end of the month in order to do business the next day. Having said that, we will go through reports or processes that you should run in preparation for the new month, but you do not have to in order to do business in the new month. Backdating of journal entries is controlled by what we call an administrator option, or an AO. And with each of these, I'm also going to be showing you the screenshots of these. So the screenshots are going to be on the next page. So backdating of journal entries is controlled by AO financials period structure. And in there we have first valid period, last valid period, periods forward, and periods backward. And these allow users to back post within certain parameters or boundaries. So here we're looking at an example of the administrator option for the financials and the period structure. Most people who are on this call do not have access to the administrator options, which is why it's handy to have screenshots of the AOs so that you know where this information is set. And while all of the screenshots that we're looking at are in CSD, the same is, holds true in GUI, so the GUI administrator options as well. This is an example where we're looking at the default period is 0, and that just means continually post into one specific period. The only time that I've seen that option used is when a company has been sold and you want all transactions you're posting to go into whatever that period was where the sale date was effective, which basically means you're closing out this company in CSD and don't intend to do any kinds of posting into new periods. The first valid period that we're showing here is 1/20, so January of 2020. That setting alone will keep users from posting into 2019. That is considered to be a hard close of 2019. So it's a hard stop. Users cannot post back into 2019. The last valid period in general, I have a tendency to set to like, I don't know, 12/49 to forever so that I don't have to go in there and change it. You cannot post into the new year unless the GLAY has been run, creating a chart of accounts into the new year. Having said that, I am not surprised when I see that companies have that set for the same fiscal year. So, for example, 1/20 to 12/20, and that's perfectly fine. But there may be those of you who do not need to have it set that way. Periods forward in this is set to 12. Periods backward is set to 12. And again, those periods forward and periods backward are hard stop constrained by whatever the first and last valid period are. The current period only, by the way, is not used very often. That's if you do not want users to post into any period other than the current, and that's a hard stop so that you can post into the, that's a good question, Valerie, so that you can post into the current period only. The valid periods, the first and last, are, you do not have to populate them. There are some situations where you would need to, and we would get into those separately. And those first valid and last valid periods are fiscal. So if your fiscal year is January 2020 to December of 2020, then that would be January 20. If your fiscal is March to February, then that first valid period would be equal to March. That is a fiscal period. Good question. Keep them coming. I'll answer those that I can during this, and others I won't be able to get to until we get to the end. So this is an example where the users can back post one period. So even though the first valid period says January or 120, period 120, perhaps I should refer to it that way. If I am in October, this person can only, or this company can only back post to September. They cannot back post to period 1. They can only back post by one period. So that it is pretty much what you would call the lesser of two. And so if you set some of these questions, I can't read quickly enough. So could you read me that last question that just came in, Brian?
Yeah, I don't have it. It must have been sent direct. I don't see it in the chat box.
Okay, I can read it in the chat box. So if you set the first valid period and then you need to post to the previous year, can you wipe out the first valid period and set the periods backward to allow posting to the previous year? And the answer to that is yes, conditionally. So a couple of things. Whenever, and we run into this quite a bit. So let's say you've done what you call a hard close of the year, and then you get accounting entries from your outside accounting firm that you need to back post from your auditing firm or something like that. Yes, you can go in here and change those. And you would want to make sure that if those were changed, first of all, that you log out and back in for those administrator option changes to take effect. If you need to back post greater than 12 periods, contact NSA or your whoever your support is for the instructions on how to get through that. But that does happen from time to time. So let's say that you get into January 2021 and you need to post into December of 2019. That is greater than 12 periods, and there are a couple of little nuanced things to that. I will also be covering that next month in the year-end processes that we go through. But if you have any questions about that and you run into the situation where you have to back post greater than 12 periods, reach out to me or whoever your support folks are. All right, that was back posting. Now, let's talk about one more thing, because I would very much appreciate if people would support this enhancement request. So to hard close a prior period or year, change the first valid period. So let's say, for example, we'll use October. Let's say you do not want people to back post anymore into September, then you would change the first valid period to October 20, so to 10/20. Or if we were using a calendar period, for example. So you would change it to 10/20 if you don't want users posting back beyond that. As of right now, there is no option to control back posting by the user. So this back posting flag setting is across the board. We run into this question very frequently. Where people will say, well, I don't want anybody accidentally backdating the invoice processing or doing stock adjustments or payables or receivables into the prior period, but we need our accounting team to be able to post back into the prior period. Or we run into this with publicly held firms or with companies that need to produce financial statements for bank within, let's say, 6 working days of the new month. There is no setting today where you can say, lock this down for all but specific users. Several of us have modifications that take care of that today. I created an enhancement request, so an ERS, for those of you who are not familiar with that. An ERS is a tool that Infor uses for customers to communicate to them. This is important to me. Please consider doing this in the next software release or in the software. So this goes to development, and you would get into the Infor Enhancement Request system and look for ERS 63680, And please endorse that if this is something that interests you. Actually, how about if you endorse it even if it isn't something that interests you? It's an important thing to have. It gives us greater flexibility to close out the period for all but a handful, as your company designates, of users, to keep people from accidentally backdating. What we do as a workaround for this today, unfortunately, is either work after hours or change those administrator options and hope that nobody accidentally posts back. And it's something where we would rather see that it was a flag that was give us the option to use this feature in a future release. So there we go. Enough about back posting. Now let's start talking about some of the processes. So the first one I want to walk you through is called ARAP. An ARAP, I believe this functionality came out in some version of 10 or 10.2. So it really depends what version you're on. For those who are on older versions, for example, 61091 GUI, you may not have this option. But what this allows you to do is, rather than having to get into the administrator option, AO, and click on set per month, which would fill these dates in basically for the calendar periods if you want them to be even calendar periods. You run this report instead. So you would set the ARAP report up to run, let's say at, I don't know, on the 1st of each month before you start transacting business. So it could be the 1st of each month at 1 a.m. or something like that. And it will automatically update these aging periods in the administrator options. So you don't need somebody in IT to get into the AO and click on set per month. Now, having said that, not everybody wants to have the aging period set exactly as calendar. And just so you know, this is not just for cosmetic reasons. This also sets your periods so that if you say, for example, if a customer is 1 or 2 or 3 periods past due, service charge them or put them on hold. So some people have this as an even 30, 30, 30, 30. I also work with users that have this set at something completely different from that. They may have them as 25-day periods or 15-day periods. If, on the other hand, you want them to be clean months, then you would use the set per month, or you would use the ARAP, scheduled as a stored report, to do that automatically. This is what it looks like when I get into a customer inquiry and have used the set per month. You'll notice that these dates are clean months. So October 1st to October 31st, September 1st to September 30th, instead of an odd combination of, I don't know, 9:30 to 10:30 or something like that. So that's how you would use ARAP to do that for you in an automated fashion so that you had clean months when you're looking at this for display. Now, having said that, when you run your AR aging report, you do have the option of running it for a whole month versus some other like set months that you have. So it doesn't really have to do necessarily with your AR aging report, but it does have to do with your period balances and the cosmetics that you look at when you're looking at ARIC. The next thing we're going to look at in terms of processes is ARER, or Accounts Receivable Entry Roll Balances, otherwise known as aging within the system for a couple of things. So ARER can be set up to roll daily. So perhaps you don't want to see the presentation this way. Maybe you want to see whatever the latest daily aging is. You can do ARER roll daily so that the period balances are changing on a daily basis that you're looking at in your customer inquiry. Or you can run it once a month, or you can do both. But at the least, yes.
Working on the quote.
Could you put whoever that is on mute, please? So the other option that we have with ARER is when you run this, you can age those customer balances, but you can also post the month-end service charges. So How does not running it daily affect the use of the AR hold period? That's a good question. It means that customers will not go on hold until the end of the next month, until the month-end one is run. So you could actually have customers going on hold daily based on how you do the ARER, because they'll roll into, the period buckets may change incrementally. So that's a good question. Some people don't want that to happen. They don't want it to happen more than once a month. That's a company decision. That's a credit collections, and I will tell you that people will spend quite a while pondering what the right thing is to do with that. Posting service charges. If you service charge customers, and there's a couple of flags for that. There's an administrator option where that can be set up to say how much you service charge. You can also set up different service charge levels in ARAOS based on other parameters for the customer. Or you can also go onto your customers in ARSC, and there's a flag setting there that says yes or no to service charge this customer. So if you want to service charge but not service charge everybody, then you can go onto the customers and say which customers you don't want service charged. If you want them service charged, then we generally recommend that you do that with the month-end roll balances and say yes to service charge, and also say yes to month-end payment history update, and we'll take a look at what that looks like in a moment. If you want to print the service charge invoices, now many people prefer not to, or quite honestly, many didn't know that you could. I work with users who have been on the system for years and did not know that there was a miscellaneous accounts receivable invoice that you could print. So you can use the AREI, AR entry invoice print, to print service charge invoices or other miscellaneous AR invoices. So this is not for your OE invoices, not for your sales order invoices. This is for invoices that you create through AR, so ARET. So if you create NSF bounce check fees, or if you're putting miscellaneous credits or anything like that directly in ARET or in ARECE, you're creating debit memos, you can print those out using the function called AREI. And there's a screenshot there so that you can see how AREI can be run. Nope, it's not a new function. Good question, Leila. Nope, AREI has been around since the character days. It's been around for a very long time. Now, cosmetically, it does not look anything like the OEEPI or OERD demand invoice. It doesn't look anything like it. It doesn't have that same kind of cosmetic overlay, but it's so much better than telling customers, I can't print that for you, it'll be on your statement, or trying to mock up something on a Word doc. You can also add notes to that AR invoice and those notes, and make those notes print, so you can put a lot more verbiage on it than service charge or NSF fee. So it's a very handy feature to have, AREI. If you don't have security to it, talk to your IT people. Most customers that are using the software do not know that this function exists. Okay, on to the next recommendation, which is ARES, AR statement print. So you print statements, most people realize that, but there is an option in ARES that says demand statements, and by default it is set to yes and should be set to yes so that you can run those statements on demand anytime that a customer needs a statement. For the month-end statements, we recommend that you set that to no, because if you set it to no, then that means this is not a demand statement. This is your month-end statement, and that will update these fields in ARSC, which display in ARIC for what the last statement balance was and the statement balance before that. This makes it is a good tool not only for accounts receivable credit collections, it's also handy for Cash App people. If you get in, so for example, I'm looking at this and I get in a check for $27,800 and 32 cents, I realize that what they're doing is paying off of their statement balance from the prior month. So it's a handy feature that a lot of people don't seem to realize, and that is not new functionality either. That's been there for a long time. Continuing on, general aging reports. So regular aging reports, there are two of them in the system. You have your vendor aging, which is the APRP, and you have your customer aging, which is ARRP. But there are three other reports or report type functions in the system that are underutilized because people don't realize they exist. So there is within SX.e a cash flow report, and it's called APRF. And what that does is it prints out the open receivables and payables and nets them based on their terms. It's very handy to have for cash flow forecasting. Now, not everybody pays within terms, and not everybody pays their vendors within terms, but this gives you a general idea based on the terms what your open receivables, payables net to, and can be one piece of cash flow analysis and forecasting. The AR group activity looks more like a statement. So if you're using the AR group function to group your customers together so that you can see multiple different customers rolled up into the hierarchy of a group, you can see what they owe you or print out to them what they owe you using the AR group activity function. Then this other one is the ARIC credit exposure, and I'm actually going to jump out and show you what that looks like. So in ARIC, which is an inquiry, on the credit exposure tab, there is a functionality that is, again, underutilized, and this is in both GUI and in CSD. I'm going to go into ARIC and show you what this looks like. ARIC, customer inquiry. Make sure that the customer is blank. So have these fields over here blank, and then click on this tab called credit exposure. Again, it's the same in GUI as it is in CSD. And when you do this, you get wonderful Excel-ready reports that you then just click and download into Excel that shows you all of your open accounts receivable. It's not aged in the traditional way. So this is not 30, 60, 90, 120, but what this shows you is the customer, the type of customer, the ship to, the hold message, why they're on hold, if they're on hold, what's past due, the total the customer owes you, any open orders that they have, their credit limit, how much credit they have, their average days to pay, and their sales year to date. You can also filter this. So you can say, I only want to see it if they've got balances past a specific date, or if they're only over their credit limit by a specific. You can also say, I only want to see it if they're on hold. You can also say, I also want to see the ship tos. And when you do that, it adds the ship tos so that you can see the separation. Or you can say, I only want to see it if the customer's total balance is over, let's say, $20,000. And again, not a classic aging report, but awfully handy to be able to have, and extremely underutilized, which is too bad. I think it's because people don't realize that it's there, or I think that it's because they have a customer load in and in here, and they're inquiring on a customer, so that when they go to credit exposure, it only shows that one customer. So again, to get the full list, you need to be sure that the customer is blanked out. And getting back into, so that is our aging reports and our reports that are related to aging. Next is our general accounting reports. So if you use the functionality where you're doing currency revaluations on your assets and liabilities, then you would at least monthly want to run the GLAR to revalue your assets and liabilities based on the current currency exchange rate. The GLRA, many people are familiar with. That is what you call really your general ledger. That's the transaction activity for your general ledger. Followed by the chart of accounts. Again, people don't realize, I don't know why, they're doing queries to find out what their chart of accounts are, but the GLRC is the report of your chart of accounts. The GLRD is another one of those underutilized reports. It is the daily change report, and I will run that just to give you an example of GLRD. So GLRD, daily change, and I'm going to run a one-time copy of this one that I have set up. Next, next, and save. And what this will do is pull information in showing the daily change in key accounts as you've set them up. And then it will give you the sum of the open orders. Did I run it right? Okay. Yep, there it is. So daily change in balances. Let's see if I can pull this up quickly so you can see an example of what it looks like. And again, this is underutilized because people don't know what it is or how it's used. Let's see if I can zoom in on it. And we're waiting. I'll come back to the daily change in operation after it's refreshed. Don't know if that's mine or if it's my internet speed. All right, so GLRD, we'll take a look at that in a couple of minutes. GLRF is if you're using the CSD in-system financial statements. If you do, you can also optionally use the GLIF to do a drill down on them. If you are not using GLRF, or if you're using GLRF for some things, but you're using F9 for others, then you would be doing your extract. You're doing your extract on a daily basis for GLAE, but you also would probably be running it multiple times as part of your month-end process. So GLAE is the extract for F9. Tax reports. So these are the standard ones. Some folks are using Taxware, Avalara, Vertex, but if you are not using those, these are the standard tax reports in SX.e. So the SMRGR is used for U.S. taxes. SMRT is used for Canadian companies. APRG is the goods and services. And if you're using the in-system 1099, and again, that's more run at year end, we usually run in, let's say, January. It's APAF for the vendor 1099 report. Okay. Now, we'll get to other reports of interest. Before we do that, I'm going to see if my little report came up. There we go. Took a while. So I'm waiting for my magnification to come in. Okay. So if you've not seen it before, this is the GLRD, Daily Change in Operation. And you use certain tables to set up which accounts you want to see. So for example, I wanted to analyze my cash accounts, what their daily change was, the receivables, net sales, and accounts payable. Some folks use inventories, they do other things like this. So this shows me on a daily basis what the debits and credits were for the net change, what the period balance and the annual balance are for those key accounts that I put in there. It also shows me on a daily basis as you're running this what the orders were that were placed for the company and what the purchase orders were that were placed for the company. So that's the GLRD. Okay. A few other reports that we'll talk about that are what you would call of interest. So these are ones that accounting teams may know about or may not know about or may not even have access to on the menu. So there's the APAV, which is the vendor ranking, and this lists how much revenue you are generating as a result of your trade vendors, it's a report that you can run in update or non-update mode. If you run it in update mode, it will use what it calls the classification to put your vendors into, for example, class 1, class 2, class 3, or you can run it just for information to see what the profit or the margin or the sales are generated as a result of these vendors. There's a comparable report for the customers that we'll discuss on the next tab. Cash requirements report. Okay, so you're running cash requirements at least once a week to do your check run, but we also recommend taking a look at it once a month just to review the invoices on dispute, just to make sure that those aren't aging or that they're not stuck for the wrong reasons. For example, they could be stuck in an open APEI batch, or there could be some other problem, and sometimes people are running the cash requirements report only looking at the current due, and so we just recommend for keeping things tidy run this once a month or even once a quarter to take a look at the disputed vendor invoices to get those taken care of. There's also the vendor margin analysis report, and again, these we're not going to get into them, but they're on here just so you say, maybe I want to take a look at that. The ARRO, that's accounts receivable open activity. We recommend that aside from your cash applications folks and your credit and collections people taking a look at those to make sure that they're cleaning up the miscellaneous credits and the unapplied cashes that have not been posted. And by this, you would run ARRO only for MCs and UCs or only for unapplied cashes or whichever. Aside from cleanup, you want to be aware of escheatment regulations. So in some states, actually quite a few, if you have credits that are sitting out there on your accounts receivable that are aging 3, 4, 5 years, those are not money in the bank. Those need to be turned over to the state, depending on, again, the state that you're in. And I don't believe that the provinces have this, but there has been talk about it with the provinces. You may see commercials for unclaimed money. Well, that's because you're taking money, people are taking money credits and sending it to the state or to the province for people to collect on that's unclaimed. And I've got a link there for an organization where you can look these regulations up by state and province. There's a link from that to the individual states and to the provinces. Two other reports on this page is the ARRCD, which is the AR days to pay. So for folks who've been on the system for a long time, you may know that the average days to pay on a customer seems to be from the beginning of time, which is accurate. But if you want that updated on a more frequent basis, as in, what within the past 12 months, then folks are using the ARRCD report to do that and run that calculation on a regular basis. So they have it usually looking at the last 12 months of history for a customer to do that, and that updates a field in the customer that shows their more current average days to pay, not just the one from when they were set up 17 years ago. The ARRCW is the AR Credit Early Warning Report, and it shows you customers that are not just at or above their credit limit, but customers nearing it. So if you say, I want to see, customers that are within, maybe 80% or 90% of their credit limit, it's sort of for folks who want to get out ahead of what could become an issue of people eating up, especially if you've given them large credit limits. So that's the ARRCW. Now flipping over to the inventory and sales side, we have the IC surplus stock report. Now these may be being reviewed by operations, but often accounting is pulled in to take a look at these, so or wants to do their own analysis, or is managing the inventory management team. So there's a surplus stock, a turnover analysis, which shows you what your inventory turns are, and an unavailable inventory. So you're running your trial balances and other inventory, but perhaps you've got a large buildup of inventory that's unavailable, damaged, not available to sell, in inspection, whatever the reasons are, and you may want to know what that total dollar is, not just blend it in with your regular inventory. Another excellent report is the invoice register report. So you run the OERI, you can run it for the day, for the week, for the month, for the year, and it gives you all sorts of slices and dices of your orders that can be quite interesting to look at. You may want to run that several different ways. Start off with running it just for a day, and then run it to view for a month to see what it looks like. Again, it gives you interesting sales analysis information. As with the vendor customer classification and ranking, SMAC, yes, smack, not where you would expect it. You would expect it to be in AR, but it isn't. So under SMAC is where you would run the customer classification ranking, and again, this is what would rank your customers if you did the update of classes 1, 2, 3, however many classes you set up in your administrator options, or you can run it for report purposes only. You can run it to see customers based on their profit, based on sales, and or based on margin. And then the last one that most folks are aware of that can be run any number of ways is the SMRS, sales analysis. Okay, next. So we ran through those reports. Now let's talk about suspense accounts, the bane of accounting. Best practices are to clean these up daily. If something hits suspense, something went wrong. So usually, not always, usually this is caused by somebody setting something up, not informing accounting. So whatever the general ledger integration was has not been set up yet. So some common examples would be somebody created a new product category. Then they put products into those categories. Then they started receiving those products, and suddenly accounting's getting hit with a bunch of suspenses because they did not have their ICSEG set up for that particular product category or product warehouse category. Another one would be people adding on new taxes or another add-on for sales orders and not putting in the general ledger account, so you start getting a bunch of suspense hits. So accounting usually likes to jump on top of these. You can set up an event manager, to get a notification on a daily basis or on a real-time basis if something hits suspense, and then jump on it and find out what caused it and get a resolution for that cause. So it isn't just reclassing the suspense journal entry to get it into the right place. It's finding out what caused it so that you can nip it in the bud and it doesn't keep recurring. If you're not doing it on a daily basis, then at the very least, you'll want to do it for month end so that you can produce, clean financial statements. As to what causes suspense hits, aside from missing general ledger integrations, sometimes it could be a bug. Sometimes there could be a problem with some custom code. So finding out what the reason for it was is important so that you don't keep getting suspense hits, because they generally don't go away on their own. Next is making sure that all journals are closed. So if you don't already wrestle with it, I can tell you that one that causes accounting a great deal of indigestion is open OEET tendering journals. So let's say somebody tenders, takes a down payment on an order, goes home for the day and doesn't log out, leaves the system going. The next day they come in and they continue tendering on that same open journal. The folks in accounting are trying to reconcile to bank what was posted on the day, but the information from that journal is being added to, so they can't get a clean day cutoff on OEET. So it's critically important for a lot of reasons, including days work in a day, having our journals closed, for the journals to be closed on a daily basis. By end of day. You can run certain reports. When you run your trial balances, there's options that say, would you like to see open journals on this report? And you can see them that way. But you can also go into the GL inquiry, click on journal lookup, select open and click search, and you'll get a list of all of the open journals. Now, if they're open, right now for the same business day, that's not nearly as big of a problem as they're open from yesterday, the day before, a week ago. Those need to get closed. You can use, that is a good question. Are there any enhancement requests for people leaving journals open? There have been issues with that are being looked into. I do know that there are some fixes, for example, for hung open POEI and WTEI, but I think it's an excellent idea to look in the ARS to see if there are any for journals open. We have done some programmatic things. We, being NSA, has done some programmatic things for the clients that we work with to actually run through processes and force close all open journals that are in balance on a nightly basis so that they don't have to leave that to chance. And would like to see something similar done for any balanced journal, that's not closed by midnight. So that's an excellent ERS request. You can, generally we want the user to close their journal, but you can go into SASJ, System Administrator Setup Journal, to force close journals that are in balance As long as it's not an invoice processing journal, don't do that, don't do that, don't do that. You'll have so many things go out of balance that OEEPI would update. It's not even funny. Instead, if it's an open OEEPI invoice processing journal, there's a process specific to closing those called SAAJ, journal recovery, and it will complete the processing of the OEEPI. We've seen this happen sometimes when OEEPI is running, and then the system does like does a brownout, or some kind of power glitch, or the backup starts and it steps all over OEEPI, and then OEEPI just hangs out there. You don't force close it in SAAJ. You use SAAJ to recover it. So, a couple of more things, and if you cannot use SAAJ for any other open journals. It is only used for order entry, OEEPI, journal recovery. Excellent question. Now on to bank reconciliations. There are two different methods now, and this is specific to CSD WebUI because it's version specific. There was another feature that was added in 11.19.8, which is beyond the GUI version. So if you're on 11.19.8 and above, you have two different methods you could use to do bank reconciliations in CSD. You can use only one of these per bank. So some of you are using CREC to clear your checks. Some folks didn't know you could use CREC to clear your open AP, your AP check, so that you could run a clean CRRC check register. So if you only want to clear the AP checks, you can do that in CREC, and you don't need to run this process called CREB. CREB is if you are doing a full balance, your CRSB bank to your bank statement. So that's method number one that's been around for a very, very, very long time. So like for years, and it's okay, but it's not the greatest. The second, and so this is just what the screens look like. So the check entry center, CREC, these are the different transaction types. So if you want to do a full bank reconciliation, or you can just clear your bank accounts, you can clear your checks. So here you'll see quick clear. You can get a list of checks. You can clear your checks in ranges, and again, that's so you can run a clean CRRC check register of checks that are open, that are like still pending bank as part of your bank reconciliation. CRER is the new functionality that was added in 11.19.8 to reconcile bank statements if your bank offers a downloadable bank statement. In other words, if you can go onto their site and download, a CSV file, a pipe delimited, whatever file, you can then use that to import and go through what's called a matching process in the CRER Check Reconciliation Center to do your bank reconciliation. Again, you only use one method per bank. You don't have to use one method for all banks, but you can only use one method per bank. Then we get into our traditional balancing the general ledger to subsidiary reports. So we've got the trial balances. We have the, so each of these are a series of reports that are tied to control accounts in CSD that allow you to balance the general ledger to your subsidiary ledger. So if you say you've got $2,500,000 in accounts receivable, then you should be able to run an AR trial balance that agrees to that $2,500,000. So these reports are some of the reports, and there's the rest of them that you would be running to make sure that you keep things in balance to the general ledger. If the subsidiary ledger goes out of balance, there's a series of reasons why. There's whole workshops that are done around balancing and keeping things in balance. Probably the most ornery one to keep in balance is the ICRTT inventory, regular inventory report, because it has so much activity going in and out because of average costing, there's a lot of reasons. There's additional sessions that would be available, or training on dealing with balancing within the system. Another thing that we recommend is turning on this flag, if you have not already. That's an administrator option called Track Balancing History. So you would want to have that set to yes, and what it will allow you to do is let's say that you don't look at your balancing reports on a daily basis, and you can't find the email when it went out. You don't know how long ago something went out. Well, if you have that flag set to yes, then you can go into your GLIA account inquiry, and you can look at the balance history tab and get a listing of what the general ledger total was, the subsidiary, and what the difference was, so that you can look for variances that go back on a daily basis, so you can see when things are going out of balance and respond to that, rather than being as dependent as looking at the reports. Looking at the reports is good, but sometimes people misplace them, don't get a chance to look at them, delete them from their emails, can't find them on the server, whatever the reason is. So the GLIA balancing history is an excellent thing. Just a couple more concepts to go over. GLAP, this is the General Ledger Distribute Profit. You run this at month end after you've done all of your posting for the month. You can run it again and again and again if you need to. All it is like an auto reversing. It will take the profit and post it into your current year earnings account and be offset by a clearing account. So if you've done back posting, you can rerun the GLAP for those periods you've back posted to. This is what your general ledger trial balance will look like before and after you've run GLAP. So before, you'll see that there's a proof, the assets minus liabilities proof. It's equal to the income minus expenses, but the clearing accounts are zero. If I were to run my balance sheet right now, my balance sheet would be out of balance by $460.06. After I run GLAP, then it posts it to the profit clearing account as an offset and to the current year earnings account on my balance sheet to have a balanced balance sheet. There is a white paper. If you don't have my email address, feel free while we're having our conversation now to take down the email address. I can send you the white paper that goes through what we've gone through in greater detail than just the presentation does. And with that, I'd like to open it up for any questions. I think I got all the questions that we had posted. Does anybody have any questions?
I went off.
Okay.
Yeah. So guys,
our next.
So just keep in mind, one of the things that Kathy had mentioned is year end, right? That's coming up as well in her webinar, so please stay tuned for that. And one of the themes that Kathy kept hitting on is, you may not be aware of, you may not be aware of. So please reach out to NSA on any, month-end issues or requests that you might be trying to accomplish that you're not quite sure how to do. And we can certainly help you with that.
All right, everybody. And with that, thank you very much for your time. Enjoy the rest of your day.
Thanks all.
Thank you.
Bye.
Thank you.